event next week, so why not?
I mean, it's hard not to like Nvidia now more than you did at the beginning of the year, right? Stock's down a lot. And what the main data that came out of Morgan Stanley's tech conference a couple weeks ago was everyone said their capital spending plans are still intact. So if I'm worried, which I am a little bit about revenue for other companies in the market, I'm a little bit less worried about Nvidia's. Then I guess the relative estimate achievability of Nvidia's revenue is better than I thought, and their stock's down a lot. So sure, I like it more. I get that logic.
Nvidia shares are higher today, though still down more than 20% from their record high just back in January. The company getting ready now for its big GTC event next week. Top chip analyst Stacey Rascon of Bernstein here with what you should expect from that. It's good to see you. Welcome back.
Good to be here.
As you look ahead to next week, just let's look at what happened to this stock of late. I mean, how should investors feel about it, the ones who love it the most?
Yeah, so I think I heard in your prior segment, if you liked it before, you should love it now. I've been a little, I guess maybe surprised is the wrong word, but I mean, I've been a little surprised at the magnitude of the decline. And I get it, the whole AI space has kind of rolled over somewhat on DeepSeek and macro and tariffs and just a broader degrossing, and I get all that. At the same time, Nvidia, I mean, we're right at the beginning of their Blackwell product cycle. It has just started. It is likely to be the biggest product cycle in their history. We'll likely get some more updates on that next week at GTC. We'll probably also get our first look at Rubin, which is the next generation. We may even get a little look at what comes after Rubin. They may talk about co-packaged optics. They may talk about quantum. They may talk about ARM PCs. They'll probably talk about robotics and every physical AI and everything they talked about at CES. I think it still looks really, really good. And at these current valuations, I mean, it went down to 23 times earnings. It's about 25 now. It's at trough valuations. You've been really, really good buying it there, like historically. I think over the last 10 years, if you bought it at 25 times or below, your average one-year return from that moment was like 150%, and it's never had a negative drawdown over a one-year period buying it under those. I really like it at these valuations in the beginning of a product cycle and with their, their conference of the year starting next week. Yeah.
How do we know? I guess I'd ask it this way. I'm the investor. I love Nvidia. I believe everything that you said. I'm a huge fan of the stock. I agree with you. It's come down. It was never that expensive. Blah blah blah. The whole story, right? That's gotten the stock to where it is. But the DeepSeek thing changed the way that I think I should think about the future, perhaps for this company. Whether it's just going to change the amount of money that needs to be spent, whether it changes the dynamic of the kind of chips that need to be used. And it's just too early to say that it's not going to have a tremendous impact.
But it's already had an impact. But what impact has it had? It's been a positive impact, not a negative impact. This was my read on Deep. We talked about this, I think, during that circus.
I know we did, but has it already had that? Just because Satya Nadella and others like you come out and say, well, it's going to lead to more compute, which leads to more chips and blah, blah, I mean.
But what's happened since then? So we've seen H20 like inventory, like in public cloud, inventory has gone down. H20 rental prices, H100, excuse me, inventory has gone down. H100 rental prices have come up. H20, their China sales, like their sales of their China legal parts into China, there's a ton more demand, like on the back of DeepSeek. They need more compute, not less compute. All of the hyperscalers and everybody else has been taking their CapEx numbers up by leaps and bounds this year. Again, I think from your prior segment, what I think came out of some of the conferences in this latest season is that those spending plans are still very, very intact. If anything, we've seen increases in demand, not decreases from and since DeepSeek, and that's been my view. But I thought it was positive. Again, the market clearly disagreed, but I think it was good. I think the prevalence of more cost-effective models drives adoption. That's been one of the big barriers to adoption by software companies and the like. It's cost. If we can actually get effective, lower-cost models that drive adoption everywhere, how is that not a good thing? I think it's a good thing.
Instead of focusing solely on GPUs, Nvidia has developed a full range of AI services and products, including networking tools, enterprise software, and more. This tech behemoth has the portfolio needed to support governments and commercial clients at every stage of their AI journey. As previously said, Nvidia's biggest clients are tech businesses, who invest billions of dollars a year in their AI initiatives. This is advantageous since these players have the financial means to execute their plans and are dedicated to their AI techniques. Let's proceed to my guess now. This next week, Nvidia will host its annual GTC AI conference, with CEO Jensen Huang serving as the keynote speaker on March 18th. Huang will probably give us some hints about what lies ahead as he discusses important events at Nvidia. And I think Nvidia's next big step will be to put more of an emphasis on innovation than ever before, because it's a crucial component for AI chip designers. Nvidia has previously given us hints about its innovative strengths. In its fastest ever manufacturing ramp, it unveiled its most recent Blackwell architecture. Additionally, the business maintained a gross margin above 70% while generating $11 billion in Blackwell revenue in the first quarter of commercialization. This demonstrates Nvidia's capacity to deliver a sophisticated solution quickly, flawlessly, and with great sales profitability. Another encouraging indication that consumers are keen to purchase Nvidia's goods is the fact that demand has outpaced supply. Why, in my opinion, is Nvidia stepping up its innovation now? Nvidia has previously discussed updating GPUs once a year. However, the business already plans to release Blackwell Ultra sometime in the second half of this year, following the massive Blackwell launch that took place over the last several months. As a result, it's feasible that this new upgrade will arrive before the first Blackwell's one-year anniversary. According to Nvidia, the Vera Rubin architecture will be released next. According to rumors, Rubin development is proceeding ahead of schedule, which might lead to a release as early next year or later this year. Given Nvidia's current focus on the significance of logical inference going ahead, I anticipate Blackwell Ultra to be especially good in this area. This could significantly boost Nvidia's already robust revenue growth. The one thing that could keep Nvidia ahead of competitors and lead to long-term, high-level growth is its potential speed in invention and emphasis on a critical development sector. Accordingly, I think Nvidia's next significant step will be to put more of an emphasis on innovation. The next chip updates might possibly arrive sooner than anticipated, and they will be closely tailored to the next region of AI growth. And it might be great news for stockholders of Nvidia. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Is higher, and when we rally, those are the names that are probably going to bounce back the most. I look at Nvidia down 25% from its peak. It was down over 30% at one point. They have a big event next week. For a tradable bounce, you get back to the 200-day moving average, which it's below. That's a 10% rally from here.
One of the big questions about this entire sort of space right now is obviously Nvidia making a small fortune because everyone's actually buying with cash those chips. A lot of the businesses that are buying those chips or access to those chips aren't necessarily making money themselves. How long can this go on?
Well, I think what we're seeing is in 2024, there was a lot of experimentation by businesses and consumers. It was really developing a new habit, learning how to use things like ChatGPT. But all of the curves that we see for what we call consumption, as opposed to the training, which costs a lot of money even today, as the models every 18 months improve by another doubling or another order of magnitude, there's billions of dollars that will be required to train the highly intelligent models on the frontier. Right. However, once those models are launched, the amount of demand, ongoing consumption that can happen, that curve is increasing at a much faster rate than the cost of training the new models. So we think over time, those curves are going to cross, and when you get enough consumption for each of these more intelligent models, they're the margins that can be gotten by businesses for doing what's called inference as opposed to training. Those margins look like they'll be sustainable, and it's really about getting to high volumes, and we think that will happen. It takes time for these technologies to get absorbed into the market, and for businesses to integrate them into their current application stacks, for consumers to start changing behavior. So for all of those reasons, though, the front end of that, it looks like a kind of a tidal wave coming in of additional demand and consumption that we're going to see for these technologies. So I think as that curve starts to play out over the next even 6 and 12 and 18 months, you will start to see that the ability to make margin from doing inference on these NVIDIA chips is going to be there for businesses that are selling AI.
Nvidia CEO Jensen Huang will give the keynote talk on Tuesday to kick off the company's week-long GPU technology conference in San Jose, California, which begins on Monday. Investors will be keeping an eye out for developments about Nvidia's next-generation Rubin architecture and Blackwell Ultra CPUs. According to one analyst, the chipmaker stock has underperformed in 2025, resulting in a compelling valuation before to the conference. Nvidia CEO Jensen Huang will give the keynote talk on Tuesday to kick off the company's week-long GPU technology conference in San Jose, California, which begins on Monday. Analysts and investors will probably be keeping an eye out for information on the company's most recent AI chips, impending launches, and advancements in robotics and gaming. The AI chipmaker is anticipated to present its Blackwell Ultra GB300 family of chips, which analysts at Deutsche Bank predicted would offer much better performance and more than 50% more memory capacity than its previous Blackwell offerings. The analyst stated that the timing of the GB300's launch will be a priority, especially as Nvidia has experienced setbacks in fully increasing Blackwell manufacturing. Nvidia may also provide additional information about its Rubin GPU, which is anticipated to replace Blackwell in 2026, as well as the Rubin Vera platform and related Vera CPU. Analysts speculated that Huang's keynote would provide hints about what lies a generation beyond Rubin. According to Bank of America analysts, GTC comes as Nvidia's stock has dropped by around 10% in 2025, generating a compelling valuation before the conference. The analysts maintained their $200 price target and buy recommendation, which is higher than the average of analysts that Visible Alpha tracks. With a consensus goal of 177, Nvidia's closing price of $121.67 on Friday would have increased by more than 45%. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Are the spending numbers from the hyperscalers recession-proof?
Look, I don't think anything is recession-proof in hardware, like, don't get me wrong. But at the same time, I don't think what they're spending right now is to drive revenue right now. Like, these are long-term investments. They've got, long-term visions. In some sense, it's almost existential, too. So what we have seen is as they're spending on AI, like we've seen like spending on other things like decline. For example, you can look in the traditional server space. And I cover Intel and AMD, and you can look at just like the server CPUs. They've been very bad. Like frankly for the last several years, and particularly as AI and spending has shifted toward things like GPUs. Their spend has come out of other areas to focus on AI. I think if they start cutting, and I mean, look, in a recession, I think all bets are off, but this may be like lower down on the list, at least of investments to deprioritize.
I know, but as you talk about, they're spending for the longer term, I feel like we're getting a little less patient to some degree with that. Like we want the results to come sooner at this point. Yeah. And if you do have a more dramatic economic slowdown, that could throw a wrench into what we thought even, 50 days ago.
Yeah, but that's not unique to AI or Nvidia. That's just a fact, right? Recessions, economic uncertainty, tariffs that get put on and taken off like every other day. I mean, that's why the market multiples have come down. Like the earnings, by and large, have not come down nearly as much as any of the stocks have, right? It's all multiple, and why? It's because, in some sense, if things are more uncertain, you don't know what's going to happen, you're going to pay less for that stream of earnings. But that's not like specific to AI. That's a general issue that I think the entire market is facing right now.
I mean, and your point overall, before I let you go, is just tune out, look past the noise, because there's a lot of noise.
There's a lot of noise. I mean, I do my best to look past it. It's not always possible. Like sometimes the noise is the story. But there's a lot of noise out there right now. You got to do your best to at least try to see what else is there.
Nvidia. Young investors adore Nvidia, but many investors remain optimistic about the company's future in spite of the worry raised by DeepSeek and tariffs. Over the past 5 years, investors in Nvidia have had an incredible experience. Since 2020, The stock value of the computing hardware firm has increased by more than 1,800%, making Nvidia one of the most valuable corporations globally. This may be due to the curiosity of youthful investors. The business recently surpassed Tesla as the most popular stock on Robinhood, an investing platform that has 75% of its accounts funded by millennials and Gen Z. Vlad Tenev, CEO of Robinhood, tells Bloomberg that AI will make it more crucial than ever to invest in firms like Nvidia. According to him, if control over technology is going to be concentrated in a small number of technology businesses, then investing in such companies will be necessary to reap the benefits. For this reason, I believe AI will make investing more significant. Gen Zers are already paying attention. On the 18 million user subreddit or Wall Street Bets, Nvidia is one of the most talked about individual stocks on any given day. The NVDA stock community, which focuses solely on investing in the tech giant, has over 88,000 members. Experts argue that Nvidia's earnings reports are now as influential in influencing market movements as the U.S. jobs report, making it one of the most followed stocks in the world. The business generated $39.3 billion in the last quarter of 2024 alone, which exceeded forecasts in its most recent profit results. Barron says that several industry analysts are optimistic about Nvidia's future and have recommended it as a buy. However, the business has had a bit of a rough start to 2025. Nvidia's worth fell $500 billion after it was revealed that DeepSeek could rival American AI at a fraction of the price, and its stock price has been relatively stable ever since. In light of tariffs and growing concerns about a U.S. recession, this has caused some investors to wonder if the company's remarkable growth in 2023 and 2024 will be repeated in the years to come. Many Nvidia investors might be overly hasty to sell the stock, according to Jim Cramer of CNBC. In early March, Cramer wrote on X that the constant selling of Nvidia is a symptom of a weak shareholder base that only understands the firm is hot and not a great one, as well as concerns over a possible sellout by President Trump in Taiwan. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.